Right, what we're looking at here is the recent backtesting I've done to just sped up. In all, I've probably spent about 20 minutes in real time. On the left here, it will show you all the system metrics of this strategy. With these bits of information, I'm going to show you a pretty cool little spreadsheet that will give you a visual representation of what a future probable equity curve may or may not look like as a result of the backtesting you carry out here. Right, what we're looking at now is a Monte Carlo-esque spreadsheet that will give the user a feel for future probable returns. Just keep in mind this is not a scientific approach to Monte Carlo simulations, and nor does it factor in, any market variables or human error. But what it will do is just outline and define what I mean by random distribution of outcome. It will basically help you understand the mathematics behind winning and losing streaks from a visual perspective. If you're new to the world of Monte Carlo simulations, and you want some more information about that, I'm not going to go through that in this particular video, but if you want to, just feel free to Google that. How the actual spreadsheet works is just through the use of random integers that give us an output of win, loss, or scratch. The distribution of these outputs is dependent upon the win and scratch percentage. So couple this with the take profit ratio, we can then start to form what an equity curve may or may not look like. You'll also find on the right here an indication of what our peak drawdown may look like based upon the sample distribution. So overall, it's a pretty fantastic tool to learn more about what your system metric extremities are. So that's to say what your likely string of losses may be, your peak drawdown capabilities, and as well as your companion annual growth rate over a set number of years that it might take you to trade 1,000, 2,000 times based upon your strategy. Right, what we'll do now is have a little play with the spreadsheet using the system metrics from the strategy I backtested at the beginning of the video. Just keep in mind 26 trades is not enough to build a strategy from. You should really be backtesting hundreds if not thousands of trades to get a clear picture of what your strategy expectancy is. Nevertheless, we can see that just under 5 years I bagged on the euro dollar 6.8% return. So you might be thinking at this stage that's really nothing to spring out of bed in the morning about, but you'd be massively wrong, as you'll see in a moment. Based upon this particular strategy, I will probably see around 100 individual trade setups a year across 28 plus FX pairs. So let's just plug in this information now and I'll talk you through it. Right, so we're going to put 65% strike rate here. Let's just say my average risk profile on that particular run was 1.85%. It's pretty damn aggressive, to be honest. The take profit ratio is just your average profit divided by your average loss. So in this example, that's $757.19 was my average profit, divided by my average loss was $674.85. So that's 1.12 as a take profit ratio. I'm just going to leave scratch at this point just completely blank. So you can see here we've immediately got an equity curve. The large chart in the background is the next 2,000 trades. The peak drawdown based upon the system metrics and this particular distribution of wins or losses, which I'll randomize in just a second, is 12.25%. Apparently over the next 2,000 trades, which will take me 20 years to do, I will be turning 10,000 somewhere within the region of 18.8 billion. So pretty substantial and unrealistic returns there. We'll put something a little bit more realistic in just a second, but I want to talk through this particular box here, the user-defined trades. What this will do is, depending on how many individual trades you put in this box here, it will actually change this chart on the fly. So it can give you an idea of what your next 10, 20 or 30 trades may look like. And I don't think a lot of retail traders really grasp that. You could start trading and straight off the cuff you're going to reach 7 consecutive losses, or your returns might be completely overly exaggerated away from the mean of your average strike rate. So just keep an eye on that. But what we'll do is we'll put something a little bit more realistic in. So we're going to put 56% as our strike rate. My take profit ratio is going to sit somewhere closer towards 1.0, and my scratch rate, so how many trades percentage wise over the string of trades that we're looking at, is going to end in break even. So we're going to say 9% of the time. So here we've got something a little bit more realistic now. So you can see the equity curve is something slightly different. It's still obviously reaching towards the top right hand corner of the chart, which is nice. But the peak drawdown in this particular sample is sitting at around about 15%. We're now looking at something a little bit more realistic. My CAGR, which is the compounded annual growth rate, is sitting somewhere around about 40% over the next 20 years. And over that period of time, we may well see a consecutive loss streak of 6. With a max consecutive win streak of 10. Now, the important thing to remember here is this part. So you can see over the next 20 trades, I could see a strike rate of 75% right. So you can see how the equity curve of the next 20 trades is severely exaggerated based upon what our average strike rate is over the next 2,000 trades. So based upon the integers here, which are completely randomized, it will in turn reflect whether or not it's a win or a loss or a scratch, as you can see from me scrolling down there. So if I wanted to continuously randomize those integers, I can go ahead and do that. Now, if you look at this small chart over the next 20 trades, I'm going to try and see if we can find an ugly equity curve. Let's have a little look. There we go. Now, the reason why I'm trying to find that is I just want to highlight a point I don't think a lot of retail traders really understand. What they'll do is they'll find a strategy. Someone's trading it either successfully, they read it on a forum, they're seeing it on places like MyFXBook, FXStat, or whatever type of website. They then try to adopt that strategy themselves, trade it, and then over the next 20 trades, they've got an equity curve somewhere similar to this and think it's complete junk. What they don't realize is if they continue trading it from that particular point, they will probably see the equity curve turn back up. You know, assuming that we're talking about an individual who's disciplined, diligent, and sticking to the plans, and they've seen it back tested. So I really wanted to highlight that because I think what this does is give the user, from a visual perspective, what a probable or future equity curve may or may not look like based upon the random distribution of wins or losses. So you can see here over the next 20 trades, I have actually got a win rate of 40%. I mean, look how much that deviates from what we're saying our average mean, strike rate is of 56%. So just some food for thought. It's a very powerful tool. You can see over the next 2,000 trades we could see a 17% drawdown. It just kind of helps you understand more about your system and makes you be a bit more realistic about your returns and what your likely streak of wins and losses may look like and your annual growth rate as well. So if you want to learn more about this spreadsheet, just continue reading in the description below or slightly further down if you're reading the actual article on the blog. There's links to that in the description as well. You can get your hands on this. You can find out more about that, as I said, below.